Everybody. Welcome to the Hurley Investments Market View Commentary of June 16th, 2025. Good to be with you this evening. My name is Keith Bybee, the loyal wingman of Kevin Hurley, taking over this evening and talking at you today. All right, so just a couple things I wanted to go over. First, a bit of housekeeping. We have, as many of you know, we've got several different positions. Our spreads on Meta, which are bull call spreads. Those are looking ridiculously good. We do have some older ones, 500, 550s. Where we just recently what is the way to say this? We got assigned short shares as short call as the short call options were exercised by somebody, which means you might see, if you have that 500, 550 June 2025, those expire this Friday. I'll just say June. If you have those, you might see some shares that are negative, which means they're short. But those are going against long calls, and the broker had made us aware of that and what was happening, and those long calls are going to fulfill themselves against the short calls that are now short shares. Long story short, everything is fine, and short shares will go against long calls, and the position will close for a wonderful profit. So, probably not all of you, but for those of you who might have noticed, we're good to go. No worries. So what do I want to talk about today? I just wanted to take a couple minutes and talk a little about our current market risks that we are watching, paying attention to, weighing, learning about, studying, researching. But I want you first to tell me what you guys are worried about. What are some risks in our economy, in the market? What are some things that have you uh, a little concerned, or a lot concerned, or mildly concerned, or just some things that you notice and want to make sure we're aware of? No right answers here, but give me a line or two that we can start to go off of. Abraham said interests and energy, oil. I'm going to say, assume you mean Israel, Iran escalation. Am I right in assuming that, Abraham? That's affecting oil. Okay. And then interest, I'm assuming also you're talking about, oops, I'm trying to do that, forward slash rate decisions, interest rate cuts. All right. Looks like we're on the same wavelength, Abraham. Perfect. What are some other things? They can be news events. We'll go down and talk about each of these things. Other things that are noteworthy, we want to make sure we talk about a little bit. I have one that's more stock specific. Lee, you mentioned high dividend ETFs. Are there risks in those that you're worried about, or give me a little more specific what you're looking for high dividend ETFs? While you're thinking there, Lee, okay, you've replied. Can I get large returns, but what are the cons? Okay, we can go over that. That's not a general risk or a risk that of the economy or a specific stock. but we can talk about that. Let's go through these, some of these big items. So Israel versus Iran. Israel, just as a little explanation, sent rockets and took out uh, nuclear infrastructure. Ah, mercy. There we go. Infrastructure. And they killed some scientists. They're nuclear scientists. They're basically wanting to make sure that Iran doesn't get the power to create a nuclear bomb. Okay, just reading, catching up. Okay, thanks, Lee. Well, I think we can talk about it a little bit. Uh, Jim, political bickering may squander or hamper opportunities for growth. Let me see if I can. What is a way to explain that concisely here as a bullet point? Political infighting. All right. Israel wants to make sure Iran doesn't get nuclear bomb. It's not nuclear, it's nuclear. Man, I'm doing so good with this typing. Iran has reacted with their own rockets. All right. So thoughts on this? What is your guys' opinion if you have one? I'll give you a sec to type something in. Is this something that we need to be overly concerned about? I'll tell you how the market reacted. Market hit this pivot point a couple of days ago last week and fell down on Friday the 13th. Very spooky, and has bounced back rather quickly today. So all in all, as far as things of the market is concerned, this is a not much more than a blip right now. So my thoughts, seems like more of the same fighting. Yes, it is an escalation to attack Iran directly, but for the most part, Israel has been fighting Iran via their proxies, Hezbollah and Hamas and the others, and now are taking the next step of making sure that Iran doesn't have nuclear capability. So I guess in short, I'm not extremely worried about this, and it looks like the market, uh, after an initial reaction, has all but decided the same. Um, Oil market spiked. I think that makes sense. I think it's come back a bit. All right, Bill, I'm going to share what you just told me. Potential problem in Israel-Iran war is if the underground nuke plants are destroyed, Iran may react by shutting down Strait of Hormuz. Bad for oil. This was just my devious mind at work. Nothing mentioned in the news. Okay. So I think that's somewhat of what the market's worried about, higher inflation. Um, I don't know, Bill. I don't feel like Iran has a lot of control with how things are traded. Kind of seems like the US is shoring up trading routes and is really taking care of those sort of things. Um, I don't know. I guess I just, again, I don't see this as too much different from what's already been going on. So I think any spike in oil is probably short term, but certainly I could be wrong. All right, next one, interest rates. I'll just go with FOMC rate decision, which, let's see if I can scroll down, have it down here on economic reports. We've got our rate decision on Wednesday this week. Market is looking for a rate cut. Didn't get one in May, and I'm not so sure that the Fed is going to cut rates because they're still unsure about the um, the trade and tariff situation. And that is likely to bug the market. If you guys looked at the big picture from June 6th, which has not been updated yet, so it's still the same briefing, big picture. I thought it was funny. Talks about average hourly earnings may be slowing, but on an inflation adjusted basis is still positive. Okay, payroll growth may be slowing, but it isn't declining. Here's the payroll growth. Declining. So the one I said that average hourly earnings come down, still positive on an inflation adjusted basis. Unemployment rate may be up from multi-decade low of 3.4, but at 4.2, it is still historically low. So it's gone up, but if you guys can remember some of the dark days in 2008, it was like 8-9% unemployment, and it was clearly much worse. So we're not very far from some of the best numbers on employment economically. I guess my thought is there's still the chance that the Fed sees this slowing as good enough reason to continue a rate cut. But they still seem unsure about the tariff issues. Two F's. Here we go. So, anyways, I guess it's interesting that they're saying things are slowing down, but not that much, and we might not get a rate cut because of that. But I actually think the opposite, which is because these are slowing, that should give us a higher chance of a rate cut. And I think they should do that because they have been behind the 8 ball too often. Those are my thoughts, but that is a risk that is more prominent, obviously, this week, and something that we're going to keep our eye on. Plane crash. One survivor. 200 plus, over 200 in India. Let's just take a look at Boeing real quick. Came back down to a support level here at 200, fell below it intraday and bounced right back and held that support level. So I would say that's a pretty darn good, and check out that volume. That's a pretty darn good support level, keeping things up. We have gotten a few people back into Boeing shares and have quite a few of you in Boeing leap bull calls. Obviously, we're trying to take advantage of this bullish trend, but the FAA at some point, at any point, can come out and say that they are releasing Boeing to do more, to be able to produce more planes. They kind of got them throttled back. And that's part of the reason that it's rallied on hope that that's going to be soon. Obviously, another crash from their Dreamliner isn't a great sign, but it all depends on what happened. What caused the crash? It, it makes me wonder, um, what happens in what kind of maintenance is required and is going on these planes outside of uh, Europe and the US, because we're not seeing these types of crashes in those places in the West. So right now I'm assuming that a maintenance issue is at fault. But so far, technically, I like how the 200-day, or excuse me, the 200 price level has kept up, held up, um, and this being outside the U.S., I'm sure the um, regulators are investigating, but it also doesn't mean completely that we aren't going to get the FAA releasing more um, plane, releasing more production of these planes. But of course, another one we're watching, and we have Boeing shares protected. Bull calls have the built-in protection on the short calls side of that spread. So whatever happens, we're good to go, and we will deal with it. All right, political infighting. Jim, I'm not really sure what to say about that. I mean, I think the market is reacting more to the things that Trump says and comes up with. Really, the only other thing is we needing that tax bill to go through, and the big beautiful bill, as it's called, has has gone through, and that solidifies the Trump tax cuts from back in Trump's first term. And that's probably a good reason for, or at least a main reason for, this market coming back and holding up, at least one of them. Um, Besides that, though, it's really just what happens with these, with the rest of the tariffs. And we're getting closer to that 90-day pause expiring. I'm sure we'll hear something more on that soon. But we also have uh, the deal with China that is all positive news right now. And again, another reason why markets have held up. Lee, you mentioned high dividend ETFs. If Kevin doesn't already have you in this, we do have a few high yield ETFs that we have a few people in. This is JP Morgan Equity Premium Income ETF, and as far as I know, what they do is run covered calls on the S&P 500 for both a little bit of protection as well as income. And last I checked, this was somewhere around 6 or 7%. And we have really liked this one. It's a good ETF. The other one is Realty Income, which obviously, as the title implies, is based on real estate. I know less about this one, and this is more of a Kevin one, but you might also have this one on. We're very choosy and picky about any income-bearing ETFs. We never do mutual funds. But these two look to have low costs and aren't based on commissions and that sort of nonsense. So as far as risks, obviously, if interest rates are coming down, any interest-bearing investment vehicle will be affected by it. So we're in a spot where if interest rates are coming down, that means the premium on interests on bonds and things like that are going up, which is good for that market. That as far as risk, there's less there, but you are not going to beat the stock market with those. And um, I'm sure you're aware, and as Kevin has always talked about, and I will reiterate, is that bonds are not protection. Interest-bearing ETFs and whatnot are not protection, as you saw from that chart on both of those both fell down on a percentage basis less than some stocks, but they still fell quite a bit. But I wouldn't think of it as a huge opportunity. Just something that can give you some interest, and just stick in a portfolio and leave alone. They are optionable, and we can buy puts if we need to. So there you go. I think that kind of wraps up all of the stuff I wanted to talk about. Those are the things that we're looking at and that we're watching, and hopefully that eases any worry or confusion on those. We have Micron earnings coming up. We have shares protected. That is for next week. Where will our markets end this week? I would think probably lower, just with some of the risks on the horizon. Obviously, if we don't get that rate cut that the market is hoping for and planning on, yeah, that's not going to, we're probably not going to have a positive end of the week. Technically, we're still bullish on all three indexes. We have a expectation of where our S&P will end June 2025 of down 1%, specifically because of some of those risks. We'll obviously know more after Wednesday's rate meeting. Monday we have Empire Manufacturing, Tuesday retail sales, industrial production, business inventories. Wednesday, again, the rate decision. Most important part of the week, obviously, housing. Thursday, market is closed. We have Juneteenth. And then Friday, Philly Fed and leading indicators. So basically Thursday, Friday, big money is out of the market and probably not looking to do much. Wednesday is our big decision maker, and whether or not we need to get more protection on and that sort of thing. How am I looking to trade? In addition to what I just barely said, we have summer doldrums coming up, and the start of that, of course, could be Wednesday when we get those the answer on what is happening with our interest rates. We have been adding short calls to some positions of shares to give us a little bit of protection. Obviously, long puts and utilizing all of our option spreads to take advantage of a couple of months of sideways movement. With that said, we have some big opportunities. Disney needing to break 120, but certainly the upside is very big there. Nvidia upside is up to more closer to 150, 155. Micron, it's actually pretty similar, back up to 150, 155. Mentioned Boeing with any FAA news, but the upside there is 250. Google getting back to 200, 205. Bank of America back up to 55. JP Morgan back to 255. Again, we're completely out of Baidu. We've had enough of the volatility associated with anything that is going on with China and Trump talks and whatnot, and their economy just is garbage right now. So we're out. So again, yes, we're entering those summer doldrums, but we still want to follow the trend. Our markets are still technically bullish, and any one of these stocks can take off and look excellent. Those chip stocks seems like, if memory serves, really like to head up in the summer. That's where they topped out last year. A couple of articles. This has given us more information on the Air India crash. I can't believe for the life of me that one guy survived. It blows my mind. One lucky dude, and you go and become friends with him and you take him to Las Vegas, is my thought. That's a good, interesting read and good to understand. Bank of America published this on 5 stocks they believe have a big rally point. Some of these I could care less about, such as Amazon, Netflix. They're still kind of the king of streaming, but let me see, and I guess it's a different article. I was going to talk about Disney, but one I thought was interesting was Boot Barn. And I think Boot Barn is riding the wave of the television series Yellowstone, and they are not looking back. Cowboys have become in vogue, and I think that's an interesting one to look at. Boot Barn. This article on the VIX and how it has fallen historically quickly. Usually it takes a month for the market to fall quick, and several months, 3 or 4 months for it to come back. And this happened in like a month. Interesting and short read. This one going in about Google and ChatGPT and some of the AI race. Here's the one on Disney. I thought this was interesting. Hulu is one of their biggest money makers on their streaming ownership, and they're looking to buy Comcast's 1/3 stake in Hulu, and how that could be a huge upside for Disney. A couple others pretty interesting. And then this last one on Meta and how they're competing in the AI space. And that wasn't the last one. This one on how the market has been so resilient and kind of goes along a lot with what we've been talking about. So another good one to go through and read. Excellent articles to take a look at this week. But right now that does it for me, unless you guys have any more thoughts or questions that we can go over. Well, all right, guys. Thank you for joining me. Thanks for your thoughts and questions. And it was a pleasure as always. As they say at Chick-fil-A, wouldn't that be a good company? Wish I could buy some Chick-fil-A. I don't even like Chick-fil-A, but I know they just are they're raking it in. Anyways, that's it for me, guys. Have a good week, and let's hope for a rate cut on Wednesday. Thanks, guys. Thanks, Jim. Thanks, Abraham. Take care, guys.